What's up, traders? This is Vee Trades, and today I will be doing a technical analysis breakdown for MicroStrategy Incorporated with the ticker symbol MSTR. I will first be going over what I see on the daily chart and finish the video off with the weekly chart. So I wasn't able to do an analysis yesterday, but I'm going to do one today because it's not a holiday and the market is open. So let's see what MicroStrategy is doing. Well, it looks like it's just consolidating at this mid $300 level. It looks like a very small little triangle pattern. You can see that we have lower highs but higher lows, so it's kind of a very tight consolidation pattern going on, looking like it wants to break out. And you get these tight consolidation patterns whenever price is trying to figure out what it wants to do. And the reason we're seeing that is because we have a bullish trend line in play. This fits pretty good against the swing lows, but we also have a bearish trend line in play. So who's going to win? That's where we're seeing a confliction in the market. The market is conflicted, doesn't know which way to go. Because the market, the traders, they want to follow the big money. They want to follow the smart money. So the smart money looks like it's not really doing anything. It looks like they're waiting for some sort of news event, some sort of catalyst. But as right now, it's not doing anything. It's just consolidating for the past couple of days now at this mid 350 level. So it's basically making those highly volatile ETFs kind of lose money, right? If you hang on to those volatile ETFs, I think it's MSTY, MSTX, something like that, you're going to be losing money because of the decay in them. Because when they roll over those contracts or whatever they do, instead of just holding MicroStrategy. So it's kind of just playing with people's emotions and letting those things decay. So overall, it's just getting a little bit choppy, waiting to break out. So let's go over some downward targets and upside targets. So downward target is this one right here, where you're going to use a measure move target. If this was a impulse created by the bears, there's a good chance they can create a similar size impulse in the future. Just like the bulls, they made a leg up right here. Price corrected lower, but still made another leg up. So this was two legs up. This is known as a complex correction or a two-legged pullback, which can lead to another large leg down. And that's where I get this leg right here. I drag it down, and that's targeting right around the 240 level. So that would be the first target, and the next target would be a gap fill attempt at the 270 target. So that's the 240, and then a gap fill right around the 275. So those are my two targets to the downside if we do break down lower. And why is it feasible we break down lower? Because the measure move target in play and the bearish trend line. And price is still below the 367 level, which was prior support. So that's not a good sign as well. So it is leaning towards the downside in the short term. So if you look at all this right here, let's say all this right here is leaning probably more towards the downside than the upside. But if you zoom out, obviously it's still a strong macro uptrend in play. So again, you got to have two different viewpoints. One of your viewpoints could be bearish in the short term, and your other viewpoint could be bullish in the long term. That's just how it works. Just like over here, it was bearish in the short term right here, but it was still bullish long term. So that's the chart for MicroStrategy. It's bearish in the short term, but bullish in the long term. And in the very, very short term, it's confliction. It's indecision going on in the market. Market's just waiting on what to do. Let's see which way it breaks out. Is it going to break down lower? Is it going to break down higher? We don't know. No one knows for sure. But it is slightly favoring the bears because this still looks like a pullback is in play. And I'll be expecting more downside for MicroStrategy unless we can see price get a strong push above that 360 level, 360, 370 level. His look at the weekly chart, EMA is catching up. Maybe that's why price has been taking this long. Just like right over here. Let's go over this because this is very important. When price is far away from the EMA, it likes to pull back to it. It's like a magnet. So price was far away from this blue line right over here. So it took, let's count how many weeks it took for price to come back to the EMA when it made that high. So let's say this is the high point right here. Back here in March 25th of 2024, that was the high. It took 1 week right here, 2, 3, 4, 5 weeks. So 1, 2, 3, 4, 5. 5 weeks of pulling back. So let's do that right over here. So this was the high. We have 1, 2, 3, 4, 5. This is the 5th week. So let me go and clear the drawings. So you see that this was a 5-week pullback towards that EMA. And then price still continued trading sideways, but eventually moved up higher. But at least it came to that EMA. And now what do we see right now? This is the 5th week. So we have 1 right here, 2, 3, 4, 5. So, I mean, it doesn't have to be exactly the same. It's not about time here, but it's just, I'm just letting you know that, when these pullbacks do happen, they're much slower than the impulse that goes up. And that's a very good thing, because if you see price go up quickly and then down quickly, that's not a good sign. You want to see price go up, and then you want to see that counter trend move slower and not pull back as much. That's very important. When you see an impulse followed by a correction, you want to watch the correction. You don't want to see it pull back too far. You don't want to see it move too fast. You want to watch how it works. So if it goes up and pulls back maybe 30%, 40% at a slow pace, that's a very good sign. That tells me the trend is ready to continue higher. That's just how it works. Like over here, price impulse up, correction, it tried to continue higher, failed. It tried to continue lower, failed. And now we're seeing a strong impulse. Now we're seeing a correction, trying to go lower. It looks like it can fail and we can go higher once this pullback is over. But the downside targets are still in play. And again, it's not guaranteed to get there, but it's looking more likely as of right now. And long-term chart is still up. We have a nice uptrend channel in play. Price just hit the high side of the trend. And you know what that means? It's due for a longer-term correction. So we could be seeing this consolidation drag out probably towards the end of the year, end of December, and maybe into even January, until this EMA pulls back. Do I think we're going to continue, sideways for several months? I don't think so. It doesn't look like it will occur. There's this nice uptrend channel right here that also can work, a nice, more steeper one. So again, if price does pull back drastically towards that 240 target I believe I had, let's take a look at that right now. On this chart is different, but either way, maybe we pull back all the way towards the bottom side of this channel right here, and that's right around the low to mid 200s. So we'll see what happens, but as right now, it's pulling back. It's not ready to go up just yet. A lot of people are getting frustrated. A lot of people are getting impatient, but that's how the market works. It's supposed to play with your emotions, right? That's how it's designed. Are you going to be really selling the top at the right times? If you're emotional, no, you're going to be buying the top. So that's what the market wants you to do. It wants you to make these mistakes, these emotional mistakes, so it can take your money. That's the whole point of the market. It's designed to transfer money from your wallet to someone else's wallet, from someone's bank account into your bank account, and from your bank account to someone else's bank account. So that's how it's designed. So it's just playing with your emotions. If you have too much on hand, on the table, then you need to understand your risk. You need to understand your time horizon and be more realistic. It's not going to go up. This is the same price as in November 13th. So it's already been a month. It could be almost 2 months of sideways trading. But this one right here, look how long this one was. If you use a measuring tool, this was about 194 days, 195 days. So, I mean, it could drag out that long. It did do it in the past. I don't expect it to, but you have to be ready for things like that. You have to be ready for a big drawdown. You have to be ready for price taking a long time. But overall, the trend is still good. That's what matters the most. If you're a long-term investor or trader, that the trend is still up. It still looks pretty good. And I expect price to continue higher for MicroStrategy. It's even struggling to go up because, Bitcoin is not doing well as it should be. Right now, it's still consolidating. It's pretty much trading at the same level as November 21st. So it's already been 1 month of consolidating for Bitcoin as well. So MicroStrategy, overall, fundamentally very bullish. Technically, long-term, very bullish. Short-term, the pullback is still in play. We're just waiting for a break above probably the 360s, a strong break above it. Not just a little break. A strong break above 360s would probably invalidate the targets to the downside and lead to a nice strong rally. But overall, like I said before, my target to the upside is still in play. Let's take a look at that right now. It's I believe it was this leg up right here. Forgot where I measured it. Oh yeah, it was this leg right here. This is my target for MicroStrategy. One large leg right here. Second leg up, and this one's at the $1,500 level. So between the $1,500 and $1,600, between the $1,500 and $1,600 target is in play for the long term, and we'll see what happens. That's all I have for MicroStrategy and daily weekly charts. This is Vee Trades, and thank you for your time.